Alright, so in this lesson we're going to go ahead and cover the Consumer Price Index. And so the Consumer Price Index, or CPI for short, is the most widely used measure for inflation and is another highly followed economic indicator by currency traders. CPI is also sometimes referred to as headline inflation. CPI does its best to measure the cost of living and determines how much consumers pay for goods and services. CPI measures the weighted average prices of a basket of consumer goods and services. The CPI percent change relative to the prior reporting period is calculated by taking the price change for each item in the basket of goods and services and averaging them. So things or items that are typically included in this basket to measure inflation include things such as food, energy prices, housing costs, housing prices, and medical costs, which are all weighted in order of their importance. So CPI is an important indicator in terms of its impact on the currency markets. Let's see why that is. Remember that CPI serves as a measure of inflation, and when a country's inflation reaches levels that are too high, the respective central bank of that nation may try to curb inflation. The most effective way to do so is by raising interest rates, which would in turn decrease borrowing, making it more expensive to borrow money, having higher interest rates, and that would create demand as well for people to keep money in their bank accounts or fixed income securities where they could earn greater interest. So inflation can have a significant impact on the value of one country's currency in relation to another country's currency. Inflation levels highly influence monetary policy. So as I mentioned earlier, for instance, when inflation starts to become too high, in the case of the US, the Fed may increase interest rates in order to prevent further increases in inflation. So generally speaking, if inflation is at levels above the Fed's target levels or is increasing at a faster pace for any other reason, the Fed may consider raising interest rates, which would therefore lead to an appreciation of the US dollar. So if you were to implement a trade to capture that, you would want to go long the US dollar. So something that you could do, for instance, is you could sell the euro-dollar pair to achieve long dollar exposure. And then on the other hand, the Fed likes to see modest inflation, and if the economy enters a deflationary period where inflation is below the Fed's target levels, the Fed may consider lowering interest rates, which would cause the US dollar to depreciate. So in that case, if you were to expect the US dollar to depreciate, you'd want to sell the US dollar, and one way you could achieve short US dollar exposure is by going long the euro-dollar pair. So just a bit more detail on that example. So given the Fed's mandate to control inflation, which is typically a 2% annual inflation rate that is targeted, and the Fed will adjust interest rates accordingly to meet these target levels. So any CPI announcement, surprise whether it's to the upside or to the downside, may cause a material appreciation or depreciation of the US dollar because it will differ from traders' expectations, and because CPI is a very important economic indicator. So many traders actively monitor CPI, and one of the strengths of CPI includes insight into future interest rate moves, because changes in CPI, as I mentioned, will inform decisions made by the Fed. On the other hand, one of the weaknesses of CPI is that it can be highly volatile on a month-to-month basis. So that is always, of course, something to watch out for. And then one thing I wanted to show you guys, clicking this link here, going to the bls.gov website, we're going to check out the news release section of this website. And then I just wanted to show you guys kind of what one of these inflation reports look like. So you'll see here, I've noticed this might be different on different browsers in some cases. So on the left, you'll see Consumer Price Index, and of course if you want to check out any of these other reports, go ahead and do so. But this should load, and we'll just look at the summary page for now. So here is the CPI report for August 2016. And so you can see, as it says here, the Consumer Price Index for all urban consumers increased 0.02%. So that was a month-to-month change of 0.02% from July to August. And then it also gives you kind of the change of CPI over the last 12 months. That was an increase of 1.1% before the seasonal adjustment. Take in mind, if you're unfamiliar with that term, seasonal adjustment, that just means that, for instance, during December, with the holiday season, that's a period where, there's a lot of shopping involved, whereas, over the summer, there's much less shopping involved. So that, of course, has an effect on pricing. So that is all taken into account for seasonality adjustments. And then as you go down further, you get some more color into different kind of, sectors. So here we see energy and food indexes remain unchanged during the month. Major energy components were mixed. You have nat gas, electricity offsetting declines in the gasoline and fuel oil indexes. Food at home index declined for the fourth month in a row, and then etc. Here's some more information kind of on the last 12 months. And then here you get a bit of kind of monthly historical information. And again, these are all month-to-month percent changes. So if you're, kind of trying to craft some sort of, maybe insight into what the future holds, this paired with even further reports which have, additional monthly changes, going back to 2015, 2014, maybe you can kind of look through this and see if there's some sort of pattern. Maybe if you notice that, there's a very kind of steady, maybe a little bit too high for comfort increase in inflation, maybe that's some sort of insight into, the future kind of thought process of the Fed. Maybe, if inflation's running a little bit hot, they may be tempted to raise rates. So, plenty of clues within this. And then as you can see, further information is provided on, different kind of sectors, food, energy, etc. And yeah, so definitely go ahead and check out this link. That's bls.gov/bls/news, RELS. Plenty of useful stuff, as you can see from here. There's a ton of other information kind of within these links. And I highly encourage you that you kind of, take a look for yourself. So that's it for CPI, and looking forward to the next one.